what's an edge? An edge is just a methodology to increase the probability of a trade beyond 50-50. There are many, many ways of establishing an edge. I'm going to show you these three. There's a million more, right? Paper trading is really critical to our process. And a lot of people don't want to do it because frankly, because of that dopamine seeking part of their behavior, right? They want to be taking those risks because that's where they get their dopamine hits. They want that excitement. Trading, if done well, is almost boring. That's the nature of it. If you're not willing to accept that, if what you really want are those exciting hits and you can't stomach the boring everyday nature of it, trading might not be for you, right? Because as a successful trader, you're going to find that there's a certain amount of, oh, okay, well, I'm just going to go through the motions again like I've been doing, and I'll make some money, and, and it's not to say it's completely boring, but it's a little bit boring, right? And certainly paper trading is something that's not really exciting, but I think paper trading is really important for a few different reasons. First of all, you're making sure that the that the premise works, right? That's one of the things you're doing through paper trading. The other thing that you're doing is making sure that you can execute this successfully. Okay. And the third thing you're doing is developing a belief in that setup. Okay. And this is really important. A lot of people ignore this part, but this is actually really critical. As traders, we need to get out of the idea, we need to let go of the idea that we can know how a given trade is going to perform, how any individual trade when we enter it, whether it's going to win or lose. We have no way of knowing. Okay. And we need to understand that we don't need to know that in order to succeed as traders, because what we're doing is trading probabilistically. Okay. We are realizing our edge through a series of trades, not through an individual trade, through a series of trades. And when we're thinking about it like that, it takes a lot of the stress out. It takes a lot of the excitement out too, unfortunately. But it takes a lot of that variability out. But in order to get to that point, we have to trust our setup. And we can't trust our setup I don't know of any way to get us to trust our setup except through experience. And the best way to start that experience is with paper trading. We need to be experiencing that setup repeatedly. And that's part of why I say 100 trades. Okay. When you get to 100 trades paper traded through a given setup, if that setup is winning 66% of the time, so if you have won 66 trades with that and you've lost 33 trades with that, you probably have developed a high level of trust in that setup. And that trust is absolutely critical, because if you don't have that trust when you get into the trade, and the market will start to move against you, that's what we call taking heat, when it's moving towards your stop, okay? You're going to be inclined to pull it off early. You're going to be inclined to not take profits at the culmination. You're going to be like, well, let's let it go. Let's let it keep running and let's see how much more profit we can make, right? And we keep holding on to that until it becomes a loser again, right? This happens all the time. We have to have trust in our setup, and you can only develop that trust through experience. Okay. And paper trading, by the time you get through that 100 paper trades, you have developed at least the beginnings of trust in that setup. And so these things are very important for our paper trading. Okay. And that's why I told people, even though you don't have setups, you don't understand what you're doing yet, start doing paper trades, because you want to get into the habit of, I've got this idea for a trade, I'm going to put it onto paper, because that might become a setup later. Okay. You might have an idea that you got out of something, and even if it's not fully formed, you're like, hey, I'm just going to try this out. I'm going to throw this on the chart, on the log as a paper trade. I'm going to see how it performs. If that performs well, then I might develop some rules around it. And then I go, okay, so now I've developed this into some kind of setup. Let's test that and see how that performs. I need you to get into the habit of doing that, of logging, because once you're into the habit of that, that's a game changer, powerful. Okay. And so we're going to give you a core toolkit to establish an edge. We're going to teach you several technical indicators and several fundamental screeners that you can use to identify assets that are likely to succeed and identify trades that are likely to succeed. But in level 1, we want to teach you this methodology first with a process of establishing your plan, defining your edge, defining your execution, implementing that, reviewing the results, modifying as necessary. Okay. So how TRI establishes an edge, how we teach you to do this is through something we call rational analysis. So rational analysis is where we look for assets that are both fundamentally solid. We'll talk about more about what fundamental analysis looks like next week. Things that are fundamentally solid and which have good technical indication. Okay, we want the intersection of those two things, the intersection of technical and fundamental analysis. We get our edge through the use of setups, and we get the setup, our edge established through the use of layered analysis. And by that, we mean any setup that you've defined, we want to see at least 3 different reasons in that setup for why you would get into that trade. Okay, and we'll talk about what those reasons look like, but typically we have our fundamental screening reason. We have typically 3 different technical reasons, and those technical reasons fall typically into 3 camps: location, momentum, and price structure. And we will, it's going to take us a few weeks, but we're going to go through what all of those things mean. But remember in your head, location, then momentum, then price structure. Okay, because we're going to be doing a lot of that.